Hey everyone. Intel is one of the more interesting stocks in 2024, given its position in the personal computer market and the AI market simultaneously. So in this video, I'm going to go through Intel's latest quarterly call and give you an update on what's going on with Intel stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so CEO Pat Gelsinger saying that their mission is to bring AI everywhere across their product segment. And they've started to infuse AI in all of their products, and that's going to lead to a substantial increase in consumer demand for Intel's products. Also, they undertook a massive cost-cutting campaign, and they comfortably met their $3 billion cost savings commitment for fiscal year 2023. And later on in the call, management said that they're not even done yet. They've got more room to increase their cost savings, and they've got ambitious targets for their profitability and profit margins going forward. So as the company looks into Q1, which is their upcoming quarter, their core business, including client, server, and edge products, continue to perform well and is tracking to the lower end of their seasonal demand. However, discrete headwinds, including the Mobileye segment and the PSG business exit, among others, are impacting overall revenue, leading to a lower first quarter guide. So that's why the company gave first quarter guidance that was lower than expected because of those discrete headwinds. However, management is noting that they expect sequential year-over-year growth in both revenue and EPS for each quarter of fiscal year 2024. What that means is the first quarter is going to be the lowest revenue and profit quarter for the year, meaning they're going to build on the second quarter is going to be better than the first quarter, the third quarter is going to be better than the second quarter, and the fourth quarter is going to be better than the third quarter. So as the year progresses, they're going to get better and better and better in terms of revenue and profitability. And if you understand the macroeconomic backdrop, that makes sense, right? Intel is expecting the PC market to rebound in 2024, and as the year progresses, it's back half weighted because 2020 and 2021 was when significant amounts of personal computers were purchased, and starting right now, 2024, is when those computers that were purchased in 2020 and 2021 are going to start getting replaced. According to Intel, the average life cycle of a personal computer is between 4 to 6 years. So depending on the individual or the use case, the replacement is anywhere between 4 to 6 years. That means the computers that were bought in 2020 are going to start getting replaced now in 2024. And as the year grows on, there's going to be more and more computers that are going to need to be replaced or start getting replaced. Of course, that's only the first year of that replacement cycle. I mentioned it's 4 to 6 years, right? So 2024 is going to be the 4-year mark of those computers that were purchased in 2020. So it's only going to get better because it's going to reach the 5 to 6 year mark, and those computers are going to get older and older. And then the computers that were purchased in 2021, which were also a higher than usual amount, are going to start hitting their 4 to 6 year window as well in 2025 and late 2024. So the prospects are solid for Intel as time progresses, as the year goes on. So that sequential growth forecast makes sense when you look at the macroeconomic backdrop longer term for the PC market specifically. And of course, we can't go through the conference call without talking about AI, right? And this doesn't seem like you can avoid discussion of AI. Even if you're following a restaurant company, it seems like they're going to be talking about AI. And Intel is no different here. The rapid adoption of AI by all industries is proving to be significant tailwind for IFS as high-performance compute, an area where we have considerable wafer and packaging know-how and intellectual property, is now one of the largest, fastest-growing segments of the semiconductor market. So this has been a tailwind for Intel and will continue to be so. I keep saying that we're only in the beginning stages of this development of AI. We're only just beginning to find use cases to implement artificial intelligence to improve and enhance businesses worldwide. This is going to be a decade or 2 decade long opportunity here for growth in the market, and Intel's in a good position to benefit from that trend. We're going to see Intel's investing aggressively to capitalize on this. They're improving their manufacturing facilities, they're adding new facilities, and they're benefiting from government incentives worldwide that's helping them subsidize those chip expansions, those chip production expansions. So that's something that Intel stock investors have to look forward to over the next decade. So in addition to the 3 Intel 18A customers they disclosed in the third quarter, they won a key design win with a significant high performance computing customer. Here's the interesting part. This customer was particularly motivated by our unique leading edge manufacturing capabilities and US capacity. US capacity. This is one of the first times I've seen where a company is highlighting that a customer is looking for US capacity. And I was looking forward to this, and I was expecting this to happen. I wasn't sure when it would happen, but given all the disruptions we've seen in the global trade, in the difficulties in getting your product from your supply chain back to where your customers are, in that massive disconnect between where production is happening and where the end user is, now we're starting to see that gap closing. We're starting to see companies prefer to be closer to the customer. And the US is one area that's been lacking in production capabilities. And now customers are seeking that US capacity. And it makes sense, right? If you've been following business process, business management, you'll know that just in time JIT has been a popular business tactic for some time now. Implemented first by Toyota, and now many companies are implementing just in time. It helps with lean manufacturing, saving costs, and reducing time between when you produce a product and when it's ready for a customer, and thereby reducing risk, reducing waste, and improving profitability, improving customer service. So now that there's even more disruption in the global supply chain, companies are saying, you know what, fine, we understand it costs less when we just look at dollar-based cost when we're producing and manufacturing overseas in some of these lower cost regions. But when we incorporate the full cost, which includes the time to bring the product from where we're producing back to the US or back to where the customer is, the increased risks now with supply and shipping, and the increased cost of shipping and time, then companies are saying, all that being considered, it might make sense to just have our capacity in the US, in Europe, in areas where it's closer to the end customer, and that would be an overall better decision for the business. So I'm glad to start seeing this here from Intel. And I'll end with this final segment here. Intel saying that to support their growing demand, just yesterday they opened their Fab 9 in New Mexico, so another fabrication facility, marking a milestone for high volume 3D advanced packaging manufacturing, which is clearly benefiting from the surge of interest in AI. So across wafer and advanced packaging, their lifetime deal value for IFS is now over 10 billion, more than doubling from the 4 billion they provided in their last update. More than doubling from their last update. That shows you just how rapidly demand from AI use cases is growing. And it seems as though, as enthusiastic as we are about artificial intelligence, the more the data is coming in, the more we're realizing that we are underestimating the impact that AI will have. And we're keep having to revise our forecasts upward. And here's another case where demand here more than doubles from the previous update, a $6 billion increase in customer demand. These are actual orders from customers for these products. So a impressive market opportunity to be sure, and Intel is on the forefront of that opportunity. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.